Hey everyone, welcome back to the AI Tech channel. Today, we're diving into a story that's got the tech world buzzing. Elon Musk's audacious $97 billion bid for OpenAI. $97 billion. That's more than the GDP of some countries. But here's the kicker. OpenAI said no. Can you believe it? Is there anything money can't buy? And what does this mean for the future of AI? Let's break it down. First, let's recap what actually went down. According to reports, Musk, who was a co-founder of OpenAI, made this massive offer on February 10th. His goal? Presumably, to bring OpenAI under his control, aligning its AI development with his broader vision. Think about it. Tesla, SpaceX, Neuralink, XAI. Musk is building an empire. And AI is clearly a central piece of that puzzle. But OpenAI chairman Bret Taylor issued a firm statement. OpenAI is not for sale. Period. End of discussion. Or is it? So, why did OpenAI reject such a colossal offer? Well, the official line is that they want to maintain their independence. They believe their current structure allows them to pursue AI development responsibly and ethically. They don't want to be beholden to Musk's often unpredictable leadership. But, let's be real, there's likely more to it than just that. Power, control over the future of AI, and maybe even a little bit of ego are all probably in play here. Now, let's zoom out and look at the bigger picture. This news comes at a time of economic uncertainty. U.S. retail sales unexpectedly dipped in January, signaling that consumers are tightening their belts. This could put pressure on GDP growth, as the U.S. economy relies heavily on consumer spending. But while consumers are holding back, corporations seem to be opening their wallets. We're hearing about potential deals between Intel, Broadcom, and TSMC, and then there's Musk's blockbuster bid. It's a tale of two economies, folks. Speaking of Intel, the potential deal with Broadcom and TSMC is significant. We're talking about a possible restructuring of Intel's business into two separate entities. This could be a strategic move to focus on specific areas of chip manufacturing and design, allowing them to better compete in the rapidly evolving semiconductor market. Think about the implications for global chip supply chains and the future of American semiconductor dominance. This is a huge deal, people. And while we're talking about competition, let's not forget about China. DeepSeek, a Chinese AI company, recently launched its R1 model, which is reportedly more cost-efficient. This could have a major impact on the data center market. Data centers are the backbone of the AI revolution, and any technology that reduces their energy consumption is a game-changer. According to UBS analyst Andrei Kukhnin, DeepSeek's efficiency might not immediately reduce power demand for inference, but Ryan Cox from Synchron believes it will ultimately lead to more data center demand. It's a complex equation. But the Chinese aren't just innovating in AI models. They're also integrating AI into their products. BYD, the Chinese electric vehicle maker, announced that it will integrate DeepSeek into its autonomous driving technology. This is a direct threat to Tesla, and investors are clearly worried. Tesla's shares plunged over 6% on Tuesday after the announcement. Are we seeing a shift in the EV market? Is BYD about to eclipse Tesla in the AI-powered autonomous driving race? And that brings us back to Elon Musk. Investors are increasingly concerned that he's spread too thin. He's running Tesla, SpaceX, X, formerly Twitter, The Boring Company, XAI, Neuralink, and apparently, he's even advising the government on efficiency. It's a lot to juggle. Is Musk's ambition a strength or a weakness? Are his multiple ventures diluting his focus and hindering Tesla's progress? This is the question investors are grappling with. The market seems to be voting with its feet. Tesla's stock has been on a downward spiral, falling for the past 5 trading days and plummeting over 16% in that time. This isn't just a minor dip, it's a significant correction. Is this a buying opportunity, or is it a sign of deeper problems within Tesla? Only time will tell, but the market is clearly signaling unease. Adding to the economic uncertainty, Citadel CEO Ken Griffin warned about the potential for a loss of trust in the U.S. due to bombastic rhetoric regarding trade tariffs. He argues that tariffs could lead to crony capitalism and erode the confidence of CEOs and policymakers. Griffin's words carry weight, and his concerns about trade tensions should not be dismissed lightly. This is something we need to keep a close eye on. Looking ahead, all eyes are on the upcoming U.S. Consumer Price Index, CPI report. Inflation concerns have resurfaced due to tariffs and higher-than-expected wage growth in January. JP Morgan traders have even laid out scenarios for how the S&P 500 could react based on the CPI reading, ranging from a 1.75% increase to a 2% fall. Get ready for some potential market volatility, folks. On the global stage, India is playing a shrewd game in the energy market. India's oil minister Hardeep Singh Puri stated that they play by the rules and are not circumventing international sanctions regarding oil. They've been snapping up discounted Russian oil since Western sanctions barred many consumers from Moscow's supplies. Puri even claimed that the previous U.S. administration endorsed India's increased intake of Russian oil, as long as it was within the price cap. It's a complex geopolitical dance, and India is positioning itself strategically. Meanwhile, in Europe, defense stocks are soaring. The Stoxx 600 Aerospace and Defense Index is up significantly, driven by increased discussions about regional defense efforts. Germany's Rank Group and Rheinmetall are leading the charge. This surge is fueled by geopolitical tensions and a growing recognition that Europe needs to invest more in its own defense capabilities. Expect this trend to continue as global uncertainties persist. The CEO of Italy's Leonardo is calling for the creation of EU defense giants to fix the fragmented and inefficient military hardware development sector in Europe. He argues that European companies are not sufficiently powerful in the current context and that consolidation is essential. This is a bold vision that could reshape the European defense landscape. Will we see the emergence of true European defense powerhouses? However, not all the news is positive. A new CIPD survey reveals that almost a third of UK employers plan to reduce headcount due to impending increases to national insurance contributions and the national minimum wage. This is a worrying sign for the UK economy, suggesting that businesses are feeling the pressure from rising costs. The survey's net employment balance has decreased significantly, indicating a potential slowdown in job creation. Adding to the defense narrative, UK Prime Minister Keir Starmer is heading to Paris with a message that Europe must show it is truly serious about its own defense. He's calling for increased defense spending and a greater role for Europe within NATO. Starmer even suggested that Britain is willing to put troops on the ground in Ukraine if necessary. This is a significant commitment that could have far-reaching implications. European Union President Ursula von der Leyen has proposed activating the escape clause for defense investments. This would allow member states to increase their spending on defense and security without breaching the bloc's rules on budget deficit spending. JP Morgan analysts estimate that every 50 basis point increase in European defense spending is worth about $115 billion annually, with a significant portion likely to be spent on weapon systems. This is a massive injection of capital into the defense sector. Finally, let's circle back to Elon Musk and OpenAI. Sam Altman, the CEO of OpenAI, has accused Musk of aiming to slow down a competitor with his $97.4 billion bid. Altman doesn't seem to be taking the bid very seriously, suggesting that Musk's motivation is to catch up with OpenAI. This adds another layer of intrigue to this already fascinating story. Is Musk genuinely interested in collaborating with OpenAI, or is he simply trying to undermine their success? So, what's the takeaway here? Elon Musk's failed bid for OpenAI highlights the intense competition and high stakes in the AI race. It also raises fundamental questions about the future of AI development, the role of corporations, and the balance between innovation and ethical considerations. Is OpenAI right to remain independent? Or would Musk's leadership accelerate progress and ensure AI benefits humanity? The answer, my friends, is not so clear. What do you think? Let us know in the comments below. And don't forget to like and subscribe for more in-depth analysis of the latest AI news. Thanks for watching.